Consumers can rest easy at least for the next 6 months following the Monetary Policy Committee's decision to keep the central bank rate and the Kenya Bank's reference rate unchanged for the 7th consecutive month. In its first meeting of the year, the CBK's rate-setting committee has held the central bank rate at 11.5% and the Kenya Bank's reference rate at 9.87%. This amid efforts to check inflation, which broke the CBK's target ceiling of 7.5% to hit 8% at the close of 2015. Financial analysts and economists had already foreseen the CBK leaving its signaling lending rates unchanged.
So by the second half of the year, we think if the currency markets are not selling off in a very big way, then that will allow the Central Bank of Kenya to think about reducing interest rates in the second half of the year.
However, interest rates are expected to rise gradually in the first quarter as the government steps up domestic borrowing to raise funds for ongoing rail, road and energy projects.
Most African countries who've raised Eurobonds now would have to borrow money at about 10% or more in that market in US dollars. So I think it's much more likely that we're going to see local government borrowing continue.
But according to the CBK Governor, Dr. Patrick Njoroge, the market remains optimistic of faster economic growth this year. Most analysts have pegged Kenya's economic growth at between 5.8% and 6% this year on the back of ongoing infrastructure projects that are expected to improve the country's business environment in the long run. Bella Genga, Citizen Business Center.